Hi everybody, this is Ludovic Catino. Welcome to our monthly update for market conditions. As you know, my mission is to get relevant information into the hands of our traders globally around the world, and wanted to go over the economic report that was published. You'll get a link, but I'll be looking at it. Again, my name is Ludovic Catino. First of all, we've had some really great solid starts to the earnings of the first quarter of this year. Looks like the Federal Reserve has changed its tone, which is a good thing, because the U.S.-China trade talks really were a major factor in contributing to the market's rally that we had in February. Although I'm sure a lot of you are stinging from December's losses. I know I am. The other thing, too, is that all the U.S. indexes have been advancing due to stronger than expected U.S. unemployment report. It was really truly astounding. It was 304,000 jobs of non-farm payroll, which is a big thing in January. The other thing too is that all the indexes, including the S&P 500, really rose dramatically in January, which is really one of the biggest rises we've seen in over 30 years. And so that's a real good sign of a potential market strength that we should have hopefully for the remainder of 2019. A couple of other points that you'll see in my report, and again you'll have the link, is that all of the indices continue to trade higher on signs that there's going to be a lot of progress. Everything's revolving around these U.S.-China trade talks, and I think that Trump is doing maybe one of his negotiating tactics, because it looks like we have a lot more leverage on the Chinese than they do on us. So looks like it's working. On the 18th of February, you know that all markets were closed. Overall, the stock market performance has been strong, even though we've had a lot of current geopolitical nightmares all over revolving around it. It just seems like it's still going beyond this misery. So it looks, again, another good, strong sign. The other thing, too, is that the Fed is, I guess the party's over a little bit, because the Fed is claiming that they're going to end the tightening sometime later this year. And if you heard just yesterday, Powell said that he thinks another $500 billion of balance sheet reduction on the total of $3.5 trillion is just about in line. It's reasonable. It's considered. All indexes are up, have declined just recently, as you noticed, because the Trump-Kim talks didn't yield anything. And as you all know, the famous, sometimes you have to walk, right? So maybe it's, again, a negotiating tactic. We'll see. But no notable progress was made at that summit, and therefore indexes declined. So little reaction. The GDP, though, despite all that, came in real strong at 2.6%, which is really phenomenal, because most of the economists and the Fed chairman, they predicted between 2 and 2.9, so 2.6 figures really on the higher end of the spectrum. So that's another good factor. Anyway, this wraps up our monthly update. Any kind of questions, concerns, please call in, email, contact at the main headquarters if we need to chat. I'd love to hear from you. Okay, bye for now. Happy trading.